Computer. Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm excited to be here with former colleagues, friends, and credit union experts, John McKechnie and Geoff Bacino. Guys, how you doing today?
Very well, thank you.
Good. Been a little bit of a whipsaw the last couple of days.
Right? Yeah, it's been a wild a wild ride on the NCUA front, credit union front. And guys, if you could kind of give a little, I know who you are. My listeners who've heard you on the show before know who you are, but if you could give a little bit of your background before we start off, and who wants to start, John or Geoff?
Go ahead, Mac.
Okay, I worked on Capitol Hill in the late 80s, worked for CUNA for 18 plus years, first in the political affairs area and eventually to the job of senior lobbyist. Then in 2006, I was appointed. Joanne Johnson, who was chairman of NCUA at the time, brought me over as the head of Congressional Public Affairs, and I happened to be there. I would like to say during the five most consequential years in the history of the agency when we had the mortgage market crisis, and then since 2011, I have been fortunate enough to continue working with credit unions as a consultant on government affairs and advocacy.
Very good. And Geoff?
Well, I guess my claim to fame is that I worked with John McKechnie at CUNA. I was actually I was the first full-time hire at Callahan Associates. I went over to CUNA. After that, left CUNA, went off on my own, was appointed to the NCUA board by Bill Clinton, then left the board. I would say during the golden years of credit unions. So I'll give John the most consequential, but we had the golden years. Was appointed by George W. Bush to be on the Federal Housing Finance Board. And after I left there, went back to running my own firm, and we manage a handful of credit union trade associations. And much like John, I still get to work with credit unions in that regard.
Very good, guys. Well, so if we've got consequential and we've got the golden years, what do we call today?
Uh,
Hang on, hang
Cluster
on.
cuss.
Buckle up.
Well, buckle up, the buckle up years. Here we go. So, a lot going on. If you disappeared this week and you wonder what's going on in credit unions, President Trump fired Todd Harper and Tanya Otsuka on Tuesday. And by the way, we're recording this on Friday, Good Friday. This will go live Monday. And NCUA's website still says they have 3 board members. So they've got a
I noticed that.
little catching up to do. But yeah, guys, so what are you hearing? What's going on? What's in your head for these buckle up years and buckle up days?
Geoff, why don't you take that first? Because you have stronger opinions than I ever do.
I don't know if I have stronger opinions. I'm the one not smart enough to keep to myself. The first thing I think you'd have to say out of it was that this is not unprecedented lately. Okay, it's unprecedented for credit unions. We've never had this happen where a board member has been fired. In the past, the only time board members have been relieved of their duty has been after their term expired. And the ones I think about is Bob Swan, Yolanda Wheat. I think that's probably all I remember right now. But basically, your term was over, and then in the case of Swan, the White House wanted to, I think it was probably Norm DeMoore wanted to get him out of there, and so he asked the White House to fire him. But until now, it's always been when a term has expired.
And Geoff, by the way, I'm glad you jogged our memory on that because I remember the Bob Swan issue, and I thought that he actually came to the office and was escorted out.
Yes, he was. From what I remember, he
And
was
his
taken out.
his term was finished, but he still had the legal ability to continue in office until the successor is appointed. That's what the act said.
Well, and if I remember the White House case, because Bob did sue and he lost because the White House's position was at that time Yolanda Wheat had been nominated and I believe had had a hearing. I don't think she'd been confirmed by the full Senate. So, in the White House legal opinion at that point, his successor had been quote unquote qualified. I think that was the word they used back then. And again, you both know I'm not a lawyer. I don't play one on TV, but that's what I remember out of that. So, yeah, Swan was that. But the thing now and basically since inauguration day, you've seen it. I mean, we've seen entire departments, USAID, CFPB disappear. If you drive into DC from Virginia now, you would pass the old USAID office, which is in the Ronald Reagan building, which no longer even has the name on the wall as it used to until about 2 months ago. So these are, I said, precedented yet not unprecedented with what's going on. The Trump administration has done the same thing with FTC, the National Labor Relations Board, the Merit Pay Systems Board, basically taking out people that they didn't want. And to me, the reason this is consequential is obviously because as a board member, at least for me in the past, it was always assumed you served out your term. Okay, so we can talk about the Harper renomination, but for Otsuka, it was Tanya had a term that ran through 2029. And, basically was told on Tuesday night, you're fired.
Yeah.
And so, again, unprecedented times in terms of our agency, but not unprecedented in terms of the last 3 months.
And John?
I'm sorry, Mark, go ahead.
No, John, you go ahead.
Well, the independent agency aspect of this is interesting. Although I will say, I know the events of the last week have been very, high wire act. It's been dramatic, in some ways melodramatic. But I would also point out that independent agencies, I'm not certain, and we can have a semantic debate about what independent agencies mean. They're part of the executive branch. Presidents have typically exercised the ability to fire. I mean, in 2021, President Biden fired the head of CFPB. Well, actually, she submitted a resignation about an hour before she was told she was going to be fired. That was the Trump-appointed CFPB head who was dismissed by Joe Biden. A couple weeks later, the head of the Federal Housing Finance Agency, Mark Calabria, who was in office for a term, was fired. The republic did not end when that happened. I'm not trying to minimize or tell credit unions that they shouldn't be on edge about some of the things that have happened at NCUA this week, but appointees get dismissed, and the courts have more recently said that presidents have latitude to fire people. By the way, you mentioned CFPB. I want to interject something. It's nothing to do with NCUA, but this morning I got a quick update from Capitol Hill. It sounds like CFPB is going to dismiss all but about 200 of their employees, which I think brings them from about 1,000 or plus down to 200. So that's an agency that's clearly repositioning itself under the Trump administration, which you'd expect it to. Donald Trump and Joe Biden, or Donald Trump and Barack Obama, are very different creatures when it comes to their views of government. And that's what we're seeing is play out is, I think Trump, campaigned on it being a change agent. We're getting change.
We are getting change. And the thought of the CFPB, because I've talked about, so I was the executive director when NCUA shut 2 regions and, walked through the alternatives of what you could consider as an agency, and a reduction in force is an option. It wasn't a kind way of doing things, but it's also not a really effective way of doing things, generally speaking, because what happens in a RIF, the highest ranking person bumps into the next person, bumps into the next person, bumps into the next person, and you can get people save their pay. You don't save a lot of money. And at the bottom, you end up getting rid of some of the newer people, the lower costing people. But I hadn't thought about a RIF so large of CFPB taking 1,200 people, doing it down to 200. That way you do save money. When you get rid of 5 out of every 6 people, nobody's left to bump, right?
And on that point, Mark and Geoff, you and Mark may have a better perspective than I do, but I have heard various people who are currently at the agency who speculate that upwards of 200 to 250 people there are going to take an early retirement by the end of the year, which will bring NCUA's head count down to about 1,000, if I'm not mistaken.
Geoff, I have some thoughts on that, but what have you heard?
Well, I've heard a couple things. I mean, obviously, the DOGE influence comes into play. I had heard that what they were going to discuss at the board meeting that they didn't have yesterday because you don't have a quorum was this, I would say, buyout plan or retirement plan. I understood it had kind of two major components. The first is if you were not eligible to retire, you could go on administrative leave through the end of the year with pay, but you would leave immediately unless you were wrapping up an exam or something like that. If you were eligible, retirement eligible, you could take a lump sum check. I understood it was 50 grand, and then you could leave, but you would not be on administrative leave. You were just gone. I do agree with both of you. I think I've heard that they're trying to reduce the force by about 20%. And then what I heard was if they couldn't do it voluntarily, you would do it involuntarily. And and again, that takes you down in 1,000, 1,200 people range.
There was a DOGE paid a visit to NCUA. I think everybody, it was reported in the press. This is not a secret. I understand last Thursday, at least somebody told me 3 DOGE staff showed up. Somebody told me 4 DOGE staff showed up, but whatever the number is, they were in the building last Thursday. I have not heard anything at all about their findings or conclusions, or if they're reporting to anybody at the White House. What I did hear from an NCUA staff person who the 3 of us all know is that DOGE, when they were in the building, made comments about how much empty space that they saw, and they thought was it that they noted that, and they apparently noted in a way that sounded like they were going to make some recommendations off of that. So, with the disclaimer that predictions are hard to make, especially about the future. Thank you, Yogi. I wouldn't be completely surprised if some recommendations were made about the NCUA building and future use of that. But I don't know what those recommendations are going to be.
I've heard a lot of what you just both said, similar versions of that. I heard today that they are going to hit their 20% number, that the returns keep coming in, right? And probably the firings of some board members had some people go, you know what? And John, like you said, this happens, right? So it happens, but when it happens to you, it could make some people make that decision. I also heard something similar to Geoff on the 2 options. There was Trump's fork in the road. NCUA has their own version of fork in the road. And those folks are accepted something that gets them through like September, and they're on admin leave and they don't have computers. There's the second batch that had to commit to staying till December 31st, but leaving on December 31st, which then allows them to get that 50K bonus. And then the way that the agency had set up, people who are at a capped pay get a lump sum for what they would have earned for the year, so they can kind of double dip on that if they get if they sign up for this and stay through the 31st. So, but 20% change, one out of every 5 people gone, and it's people who've been there a long time, people with a lot of corporate knowledge. So when the dust settles, what is that going to look like, right? And you could have people, I was there were not a lot of directed reassignments at NCUA. I was direct reassigned by Demore when I got a phone call from Bob Swan. It said, Mark, do you know what's happening at the NCUA board meeting and how it pertains to you? And I had heard some rumblings, and I was told, there's a vote to make you deputy executive director. What will you do if you get a call that says you have to move? And I called my wife. We'd only been in Albany for a short time, but I wanted to be an RD, and I was young and I did it. But so now you have all these 20% of people leaving, and people going, hey, if this 20% leaves, that leaves me in the top X percentage of experience. I'm in this location. I know they don't have enough people there. You could get not necessarily, if they hit the goal and don't have a RIF, you could get directed reassignments, which could then say, move somebody's cheese from Virginia to Phoenix.
Well, obviously, and you and I know this, Mark. When I was on the board the RD spot in Albany opened up, and I think I came to you and said, look, I knew that's where you were from. The ideal thing would be that they take into account people's wishes. And I said ideal because I frankly don't think it always happens, and sometimes it can't happen. At some point you need someone there. And so I think what you're going to see over the next couple months is obviously a reshuffling. And you're right, you start to lose a lot of that top management. You lose that brain drain of people who have an institutional memory. That's, to be honest with you, what scares me the most. Did you start losing people? I mean, I know John saying your praises earlier, I would do the same, but we've got a lot of people at the agency now that could leave, and you tack that on to the people, like you that have left. You've got a handful of folks who were just quality people who knew the history of the agency and the history of decisions, and that's what I find scariest is that you're going to have a lot of people who, frankly, may try to reinvent the wheel at the peril of basically credit unions and the agency.
Yeah, you just reminded me of a quote I use on occasion is if you don't know why a fence was put up, you might not want to take it down.
Yes. Yes.
Yeah.
And we're going to
Well,
see that.
I'm trying to, you guys are talking. I think it's fascinating to hear the specifics of this. I'm trying to kind of keep my eyes on the bigger prize with NCUA, and I've been talking to my clients about this over the last couple of days, which is, the actual regulation, examination, supervision of credit unions to me is still the most essential thing to talk about and to stay focused on. And whether we have a board that can function like it usually does, or whether the board is able to promulgate rules, which I don't think it will be able to with one person. But the real function that the public and the financial public, as well as the industry, everybody needs to focus on the fact that NCUA has got to continue keeping its eye on the ball when it comes to things like safety and soundness and the proper regulation of credit unions and the safety of the share insurance fund. All those things, I think, the disruptions that have occurred this week at the board level are one thing, but I have a great deal of confidence that the cooler heads that prevail are going to say, let's make sure that function is not disturbed in any way. And that's the hope. Let's hope that nothing happens with that. And I don't see any signs it will. I think right now that the board is going to be sorted out. If you want a look around the corners to what may happen, my instinct tells me that we're going to have 2 new board members appointed. And it may be unusual. It may be something that still rubs a lot of people the wrong way, and I get that. But ultimately, life's going to go on with it when it comes to NCUA and its oversight of credit unions.
Geoff, thoughts on that?
Well, I think John's absolutely right. I mean, obviously, every board member that's ever served, any board member that's going to serve, always loves those motherhood apple pie and baseball words of safety and soundness. Okay, we use that, as kind of a mantra that says, okay, this is what we do. And so John's right. I mean, they've got to keep up the blocking and tackling that they're supposed to do. Now, until probably a couple of hours ago, I probably would have disagreed and said I think we may be kind of on a ride toward regulatory consolidation, which scares the hell out of me. But I think I've kind of come to grips after talking to a handful of people that I trust, a handful of people that are kind of, I believe, in the know, that this may be more of these firings may be more of kind of an overall plan to be able to put a target on the back of Fed Chairman Powell.
Yeah.
And so I think it's, I wrote about this in my Bacino report. You guys will be getting it a bit. I called it the canary in the coal mine. I mean, you fire all these people, and in a minute I would want to talk about kind of the court case that decides this. You fire all these people. If they all stick, in other words, if they don't get successfully challenged, then that tells the administration you can fire Powell. Even though he's got time left on his term. In other words, I think the argument would be, fired all these other people, nobody did anything, courts decided we could do it. Well, now I can do this. So if that's the case, I believe John's 110% correct. I think we will get 2 new board members. But to me, this whole thing is going to play out against the backdrop of, and again, you guys know I'm not a lawyer, but there was a Supreme Court case, and people have heard more about it in the last probably 3 months than they had ever had before. It's called Humphrey's Executor versus United States. It was a case from the Supreme Court in the 1930s. Calvin Coolidge had appointed someone to the Federal Trade Commission. And when Roosevelt came in, he didn't feel that that board member was sufficiently invested in his New Deal.
Mhm.
And so he twice asked him to quit. Both times Humphrey told him no, so he finally fired him. Took it to the Supreme Court. Supreme Court decided 9-0 that he couldn't fire him. Now, the interesting thing to me about that decision was the Supreme Court kind of made a bit of a change between that idea that they were executive branch only. Their reasoning was because they promulgated rules and made them similar to the legislative branch, because they enforced those rules and made them similar to the judicial branch. So, I had an argument with a lawyer the other day that said you can't have a quasi-governmental agency, which is what we've always called NCUA. But the reality is, I think they do duties that are beyond that. Now, having said that, that case has been cited frequently, and it's the one that Justice Roberts cited when he allowed the Trump administration to continue their firing of somebody from the National Labor Relations Board and the merit pay system, which, again, from what I've read, signals that Roberts feels there's enough votes, or there's enough votes on the court right now to overturn that. So, similar to things like Roe v. Wade and some of these other things that the court has overturned recently, they may overturn it. And frankly, I think if they overturn it, it opens the floodgates to saying, you know what? I can fire anybody I want if I'm the president of the United States.
Yeah, I actually took the time, this may shock you, to look at the Federal Credit Union Act on Wednesday afternoon. And what I saw was that there's no for cause provision in the act like there is in some other federal agencies like CFPB. So I think that, the president's probably going to hang his hat, if you will, on that idea that I can fire these people and don't have to give a reason. I guess, and that's just a guess. But Geoff cites the case that apparently is going to decide a lot of things over the next few months as to how much latitude this president has to dismiss people.
Well, I'm sorry, go ahead.
No, I just think it's it is, and I want to get back in a minute. I didn't want to interrupt you, Mark, but I want to get back to something Geoff said about the future and about what happens if there are two new board members and the consolidation issue, which I've been all over the map on that. So let's get to that in a minute.
Okay, let's get to that. The one thing that Supreme Court case, and I'm not a lawyer. I read a little bit about it. I'm seeing some things that are said. It looks like the quote I saw about that case said you can't fire him for political reasons. So if there were different reasons, the Supreme Court might decide differently. And so that was kind of percolating in my head. And then I saw on LinkedIn, Inclusive made a comment about you shouldn't be firing people for political reasons. And then Todd Harper commented on that and highlighted that word political reasons. So, and you can argue, was it a political reason or wasn't it a political reason? But if you get, this is kind of like when you riff somebody, you're saying you're doing it for X, Y, Z reason. What did the letter say that Harper got and Otsuka got? Did it just say I'm relieving you? Did it say, I'm sure it didn't say I'm relieving you for political reasons. Did it say I'm removing you because you didn't get your plan into OPM on time? Were there things that the agency is living by the contract to the union and in not bringing back people to work? There can be arguments that it was made for business decisions, but those business decisions could be interpreted into political reasons. So the other piece of that then, so if this is positioning for Chair Powell and we're not attorneys, Harper and Otsuka can sue, may sue, probably will sue, pick one of those options. How does this get elevated to in a fashion in the courts so that it can serve as precedence for him to take action against Powell? Or is it just going to be, we wait 2 months, nobody sued, nobody got any weather, okay, now it's okay to get rid of Powell? All hypotheticals.
Those are great questions. I don't know if anybody has any real answers to them. I think the ball started to roll back when the president fired the FTC commissioners a couple weeks ago. That's what,
Mhm.
and that honestly, I remember when that happened. I happened to be with at that day with somebody who was at an NCUA senior staff person, and I think we both kind of looked at each other and said that could be the opening bell for what may happen eventually over here. I didn't know when, and I didn't know exactly what, but when the president reaches into an agency like that and dismiss Democratic appointees, I thought it was highly possible that the same thing could happen at NCUA, and here we are.
Well, Mark, but you talked about kind of where this goes. I think if the Supreme Court decides, okay, you can do it, I think that pretty much ends anything. Now, if I'm if I'm Todd or Tanya, what you have to wake up, yesterday morning, this morning thinking about is, do I want to sue? I mean, I know that's where everybody goes, but don't forget that's expensive. Okay, when we were all at NCUA, if anybody sued NCUA, who defended us? Department of Justice. Okay, last time I checked, Department of Justice doesn't clock by the hour. Okay, they don't really care. When you've got to go out and hire your own lawyer, you got to pay, and you got to pay money, your money. And so the question I think they have to ask themselves, is it worth it? Is it worth the time and trouble? What I think, I mean, again, if I were in that position, what I'd do is I'd watch these other ones play out and then determine what I wanted to do. In other words, if the FTC case or the National Labor Relations case is, if those board members are successful, then I go back and look at it. But again, at this point, they may almost be throwing good money after bad if they start spending money for lawyers, um, that are working on a case that may never win. Um, so again, and the one thing I did hear, okay, and this is again rumor, but the three of us know that sometimes the rumors are the most fun. Is that one of the things that was cited in the letter was that they weren't coming to the office, and
Well,
so
I heard that secondhand the DOGE people again, and I don't think this necessarily has a bearing on the board members' dismissals, but again, the DOGE commentary was a lot of empty space here, and that they supposedly questioned how much the return to office directive has been followed. And if that's the case, again, I'm kind of splitting the baby here. We're talking about the board dismissals, but I'm also talking about the future of the agency in terms of how it functions, where it's located, the building use, et cetera. That to me is also an equally fascinating topic, and I think we're going to get some more clarity on that over the next few weeks.
All great thoughts. I did hear recently that NCUA agencies had to report at least weekly on how many people they'd gotten rid of. And
Mhm.
under NCUA's plan, it's been zero and still is zero until people started taking the plan that they approved late.
Mhm.
Okay. You add to that Hauptman went from wanting to propose Harper as vice chair to pulling that off the agenda in violation of the Sunshine Act to correcting the Sunshine Act error. Uh, that may have gotten both of those things may have gotten NCUA's on the attention ladder, or they could have already been on the attention ladder, and none of that has to do with anything. But when you lay out a timeline of things that have happened or not happened at NCUA, I think it might have put the target on
I
them
mean,
potentially.
there's no such thing as a coincidence, especially in this business. And I think
Right?
DOGE coming in last week, starting to may have started the process that we saw come to a head on Wednesday. I wanted to ask you guys about your thoughts on the consolidation because I've been like Geoff, I've been sort of all over the map on that. And I think when it first happened Wednesday, I got a strong sense that the dismissal may be a first step to getting NCUA rolled into another super regulator, whatever that means. And that's been out in the press since February. People on Capitol Hill talked about a consolidation where the OCC, FDIC would be moved into Treasury. People on the Hill said, don't think you're going to be escaping that either, because your regulator is going to be part of it. But now, as this thing happened on Wednesday, I've gotten a stronger sense from one person in the administration and one person on Capitol Hill who has knowledge, direct knowledge of consolidation plans. Sounds like there's a realization that credit unions and NCUA are distinct enough that they shouldn't be part of the bank matrix. I think that might be the best news I've heard in a long time.
That's fabulous. Yeah,
if it's true.
If it's true. Geoff, what?
I've heard two things. I mean, three things that kind of make me feel better. One is that the Treasury Secretary has no interest in wanting to regulate or be part of a regulatory function where he is in charge of FDIC, OCC, NCUA, FTC, whatever's left of CFPB, maybe even the Commodities Future Trading Commission. I mean, if you have somebody who wants to create a kingdom that would appeal to them, evidently it doesn't appeal to the Treasury Secretary. Second thing is, and I've always thought this, the way that credit unions are funded by just credit union money led me to believe that you're going to have to Congress at some point is going to would have to approve merging the share insurance fund in with FDIC. And while it sounds easy, and I get a lot of people telling me, "Oh, come on, Geoff, you can do something like that, with the stroke of a pen." The reality is that one of the reasons I think these discussions that are be having now are kind of so helter-skelter is because of the way this administration has basically just taken over and done things. And Congress really hasn't gotten involved in much of it. And the three of us know that once Congress gets involved, things slow way down. Okay, all of a sudden, well, we better have a hearing. If we've got a hearing with 10 people who think it's a great idea and 10 people who think it's a stupid idea, well, now we got to start horse trading, and this affects and in essence, you get a commission that's going to study it, and they're going to have to report back in 2028. So I will say this: I think regulatory consolidation is, if it happens, would be the most existential threat to the credit union movement. Okay, I don't think we look and act like we do now if we're in a regulator with everybody else. And this is one of those cases where I can always tell people, look, I lived through it. Okay, I was at the Federal Housing Finance Board. They merged us in with OFEO, the Fannie and Freddie regulator. And again, I remember everything we were told. Oh, we're going to have silos. There's a Federal Home Loan Bank silo. There's a Fannie silo. There's a Freddie silo. And it all goes up through the director. Again, sounds great. Everybody's equal. No, we're not. Okay. Fannie and Freddie are still 800-pound gorillas. And I like to joke that that's 1,600-pound gorilla on your back if you're a Federal Home Loan Bank. And frankly, I hate to say I was right, but looking back, that's kind of what's happened. The Federal Housing Finance Agency focuses on Fannie and Freddie, and we've got these banks. And I think if we were put into an agency with Chase, Wells Fargo, Citi, in the end, it's going to be like, oh yeah, don't they have like a credit union that's about that size, And again, frankly, if there was no trade-off for doing it, in other words, if there was no open field of membership, there was no expanded business lending, why would a credit union stay a credit union? I mean, if you're Navy and they tell you, oh, you're going to be in this new super regulator, but you still got to be the same way you were, I'm going to say, you know what? I'm going to be Navy Bank.
All good points.
I worry about consolidation threat too. My thoughts of it have changed recently, because in February I got both barrels from somebody on Capitol Hill who said they're looking at NCUA as part of it. I'm actually surprised at how I'm now starting to think that maybe NCUA is going to be okay. And by the way, I heard the same thing Geoff did about the Secretary of Treasury, saying he's not really that interested in being part of this, being at the pinnacle of the super regulator. It remains to be seen, obviously, but I think we might be able to survive that.
That's consistent kind of with what I've been thinking. The one thought I thought could be possible is kind of like a constructive conservatorship of a credit union, where NCUA wants to conserve a credit union, might conserve a credit union, but the board is so cooperative and staff are so cooperative, you might as well let them run it themselves, right? In this scenario, Trump in some instances has said, okay, agency A, the head of agency A is going to be in charge of agency A and agency B. Let's say we get to August and Hauptmann finds happiness elsewhere, or they say, you know what, Kyle, your term's up. Sayonara. Let's have Rodney Hood, who's acting at OCC, be in charge of OCC and NCUA. Us a consolidation that's not going to Congress, a consolidation that just has leadership for the short term, which would be chaotic. I mean, if someone would be, the good thing is Hood knows credit unions, so under that example, there's a maybe light at the end of the tunnel. Plus, it has to always go to Congress, and the commission will bog that down. Geoff, that reminds me of there's no monument anywhere on the planet to a committee, and there's no monument anywhere on the planet to a commission, right? Because they that's where ideas go to die. And so it actually happening is different than maybe a consolidation of who's leading an organization.
Let me just put a postscript on what I said about consolidation. Music to my ears yesterday when I heard from a senior Senate banking committee staffer who said he had been in contact with the White House. And this person essentially, without prompting, said, I think enough people around here on the Hill and in the administration realize credit unions are different than banks. And boy, that's, again, making my week. I mean, in the midst of all this other uncertainty, and there is a lot of uncertainty. I'm not trying to sound like I'm a Pollyanna about it, but maybe this episode is forcing some clarity on how we are in fact distinct institutions that still deserve a distinct regulator. At least I hope so.
That is the best thing I've heard all week.
No, I think it's another one of those cases where you have to be on the lookout for it.
Mm-hmm. Yes.
And we were talking earlier about, kind of maybe what put the target on NCUA's back, maybe not having enough folks back to work and things like that. I think the other thing that may put the target on their back is you had two Democratic board members, a 3-person board when a Republican is president. I mean, this has happened a couple times. Again, I get to say I was part of it. But if you're looking at it from a strictly partisan viewpoint, if you're the president, you may look at it and go, wait a minute, I won in November and I still got 2 Democrats and 1 Republican here. Something's wrong with this picture. And so I think that may have also been one of the things that kind of brought it to the attention of the White House. And I don't, and look, I mean, I think the fact that Rodney Hood's been at our agency twice, he obviously has very good ties with the administration. So, I mean, you're going to be running things, I assume, at least through the prism of understanding credit unions through Rodney.
Good point. So, John or Geoff, one of you talked about, hey, eventually you anticipate 2 new board members coming in. Obviously, one would be an R, one would be a D. You'd probably run them through together to get approval. But and then we're talking about things going, will Tanya and Todd sue? How does that play out? Does that get an audience with the Supreme Court? If you were to venture a window of a timeline, what's the soonest you under all these scenarios you'd see, and then where credit unions are in the pecking order, what's the soonest you'd see nominations go forward, and what's the latest in your eyes on this Friday?
In Washington, there are 2 time frames, now and not now. Okay, so I mean, I couldn't even venture a guess. I will say that a lot of the oxygen in the room on Capitol Hill is being taken up by this tax reform reconciliation. Supposedly that's going to be, people on the Hill are saying it'll be on the president's desk by Memorial Day. I'm not sure about that, but I think right now there's a very little attention. I mean, maybe the administration could name people, but I wouldn't see there any congressional action until sometime much later in the summer. Even then, I don't know.
Got it.
The only thing I could see that might make it a little different is I think almost anyone can agree that this administration doesn't really work like other administrations. I'll just put that out there. And if not, my house of cards theory would be, Well, if you want to kind of try to lock out these lawsuits, you put people in those jobs as quickly as possible, no matter where they are, which means, okay, you go through the court case. Again, one of the things I ask is, let's say you sue, let's say they're successful. What's the relief? What's the remedy? You know? And again, let's say this thing takes 6 months or a year. I mean, do you say to them, does the court say, okay, you can go back and, oh, by the way, your term's now got 2 months left on it? So
Or your
I,
term's up and you get back pay.
yeah, but I'm just saying, I think we all agree we're in uncharted territories. I think John's right. I think the pace in Washington is taken up by issues that are much bigger. I mean, not only tax reform, how about tariffs? How about immigration? I mean, I mean, you turn on the news, and I mean, you can go cycle after cycle after things that are going on. So, but as I said, my thought would be if you wanted to try and kind of head the courts off of the past, you fill these things with board members and all of them quickly to the point where even if the court decides, yeah, they can come back, now all of a sudden you're stuck with, wait a minute, are you gonna get somebody confirmed to this post? What do you do now?
So the best defense is a good offense, and that's what the Trump administration seems to do. So that's an interesting thought.
Well, again, I mean, it's always amused me how people sometimes don't understand how this appointment process works. I mean, trust me, John and I have been through it a lot, and I haven't gone through it. I mean, you hear people say, "Oh, they're gonna pair somebody," and you're like, "Okay, I understand that's kind of conventional wisdom, but the reality is it's not always the case, or they won't get that done by now." And I mean, what I always tell people is it's an inexact science. Everyone's a little different, and the people that talk the most about it usually know the least. I mean, I remember after I'd been nominated, I heard at least 8 other names of people who already were nominated. And again, I know I'm going through the background check. I know the minute that's done, the president's going to send my name up. And yet you're still hearing people, oh no, so and so's, he's going to get it or he's already got it. So, but I do agree with John that getting 2 new board members is kind of paramount. And but we do need to make sure that the agency keeps running on a day-to-day basis.
And on the agency keep running thing, we talk about losing the corporate brain drain, losing 20%, and that is a challenge under any scenario. But I was a deep selection back when NCUA was under you can't hire because you violated federal rights, and their hiring rights were taken, which is one of the reasons I came in to be a deputy executive director, because they viewed a bunch of people as not being able to be put into positions. And would have I been that selection had that not happened? No, because I was new into the executive ranks. And so they call that a deep selection. There's going to be a lot of deep selections. There's a lot of talent at NCUA. The dust will settle. And as Henry Garcia once said to me, a former ARD, nobody's ever ready for that next position. You think you are, but you're going to get punched in the face like Mike Tyson, right? And so there's talent, there's high IQ, there's people that care about credit unions at NCUA left. And as long as they're not consolidated and can continue to do what needs to be done for the mission, there will be a new version of NCUA with really good talented people that will help the industry and the agency move forward, in my opinion.
Oh yeah, I mean, look, Brock Purdy was the last player drafted. He's a Pro Bowler. Mike Piazza was picked in the last round of the Major League Baseball draft as a favor that was sort of did to Piazza's dad or grandfather. So I mean, I agree. There's talent all over, and the nice thing is that this might allow some of it to rise to the top. I mean, you do get that kind of level where people aren't leaving and
Sure.
others can't move up behind them.
And Geoff, Caleb Williams was picked first, and Brock Purdy was picked last. I mean, what irony?
I'll keep it up.
Speaking of irony, I got a text, or I'm sorry, I got an email chain the other, I guess yesterday. Somebody was talked about one of his colleagues at a league, and this other person had been lamented. It was an email from yesterday's email dug up some email from 2015 about how NCUA needs to be cut in half in terms of staff, and we need to cut the budgets, and we need to get this agency under control. And the same person who wrote that in 2015 was now saying, "My God, this is the end of the world as we know it. How dare they cut the?" I mean, there's a tendency, I think, that people are just never happy, no matter what happens. We, the industry collectively, have wanted a leaner NCUA for years, regardless of your political posture. Well, we're about to get it, I think.
Yeah, and I think some of that narrative, and I talk about it a lot here, NCUA has a challenge getting exams done timely right now, okay? And they just elongated their exam cycle a little bit to alleviate that. But then the aftermath of that is you cut staff 20%. So don't expect to get your exams any quicker in the short term. But the dust will settle, things will get better. And again, the takeaway for me from this one is that the positive things you guys are hearing about the independence of the agency and the independence of credit unions from another regulator, which
And that could be out the window by 5 o'clock
it
tonight,
could be.
Todd.
Yeah,
So,
yeah. Maybe I should post this one today instead of wait until Monday.
well, this is fascinating. I just wish I had more clarity, but I don't.
And to be honest with you, though, I don't think anybody does. I mean, this isn't one of those things where you could say, we can do a little more work and figure it out. The reality is things are going to change. I mean, if you had told me Tuesday morning that you were going to have two fewer NCUA board members on, Wednesday morning, I would have probably taken that bet against it, and so we're in our uncharted waters. I get that, but uncharted waters don't necessarily mean that something bad's going to happen. And Mark, I do agree with you. I mean, I think that we're going to see other talent rise to the top, because you get the chance. I mean, look, let's use John's Orioles as an example. I mean, they got a ton of talent. They got so much talent in the minor leagues they can't get guys up to the major because they're going to be blocked. You know, so if you're looking to trade some of those guys, John, we'll take them at the Cubs.
I'm sure you would. I mean, we traded somebody recently, the Cubs, a couple of years ago. He won the Cy Young as soon as he got out of an Oriole uniform. So
Well,
anyway,
let's just not talk about the Minnesota Twins. Any final thoughts on this week of this week of what's happened?
buckle up.
Buckle up.
Again, that's all I can tell you. That's my best advice. And just try to stay calm and just realize that change is the watchword in Washington right now. And it's just this is a very tumultuous period in an administration that promised that. So
very good. Last prediction, guys. I'm going to say the Minnesota Vikings are going to go 9-8, and we will split with the Bears. John, how about the Ravens?
We'll choke in the playoffs again.
And Geoff, the Mighty Bears. The Mighty Bears.
I think the Bears are going to make the playoffs. I will put it right there.
Very good. Very good. All right, guys, this has been fun as always. I enjoy chatting with you. Good to see you. And, if we have another week like this, we'll have another podcast like this.
Thanks.
We're here for you if you need us.
I know where to find you. And listeners, I want to thank you for listening. Watchers on YouTube, want to thank you for watching. I hope you'll watch again soon. Mark Treichel signing off with flying colors.